Ladies and gentlemen, good day and welcome to the Rossari Biotech Ltd's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, Mr. Pujari.
Thank you. Good evening, everyone, and thank you for joining us on Rossari Biotech's Q1 FY25 earnings conference call. We have with us Mr. Edward Menezes, Promoter and Executive Chairman, Mr. Sunil Chari, Promoter and Managing Director, and Mr. Ketan Sablok, Group Chief Financial Officer of the company. We'll begin the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Edward Menezes to make his opening remarks.
Thank you, Mr. Anup, and good evening, everyone, and thank you for joining us on our earnings conference call. It's a pleasure to have you with us as we discuss our operational and financial performance. We are pleased to report a strong start to the year, driven by healthy year-on-year growth in both revenues and profits. This performance is particularly commendable given the current environment, and it was largely driven by the strong expansion of our HPPC business and a healthy uptick in our TSC division. While challenges in our AHN division persisted due to industry headwinds, we remain optimistic about the recovery in the remaining fiscal year. Our commitment to R&D continues to drive our success, and we have seen many synergies emerge through our past acquisitions. A notable example is the development of a single component emulsifier last year for the agrochemical industry, particularly in enhancing the stability and dispersion of herbicides. The emulsifier simplifies the formulation process, improves long-term stability, and ensures uniform dispersion of the active ingredient, thereby providing better coverage and absorption by target plants. Such product developments are a key reason we have delivered strong success in the agro space despite the industry witnessing subdued demand. These innovations demonstrate our ongoing dedication to offering advanced, environmentally friendly solutions that meet the evolving needs of our customers. As we have mentioned in the past, R&D is a cornerstone of our growth and innovation strategy, strengthening Rossari's position as a leading solutions provider in the specialty chemicals sector. Our R&D capabilities enable us to meet evolving market trends and offer bespoke solutions, driving growth, creating value, and enhancing our reputation for intelligent and sustainable solutions. While commodity chemicals have benefited from global industry trends in recent years, we see a promising shift where solution providers and formulators with strong R&D capabilities like Rossari will lead the way in creating sustainable value for all stakeholders going forward. The recent expansion at Dahej, along with increased ethoxylation capacity expected to be completed by year-end, will help meet the growing demand in all key segments, including agrochemicals, specialty surfactants, oil and gas, and performance chemicals. As India emerges as a major hub for global chemical manufacturing, our R&D framework, solid financial base, enhanced manufacturing capacities, and diverse product range position us well to capitalize on growth opportunities in both domestic and international markets. With this, I would like to conclude my address and now hand it over to Mr. Chari for his comments.
Thank you, Edward sir, and a warm namaste to everyone. The first quarter of financial year 25 has demonstrated our resilience and growth potential. We have had the best quarterly performance ever, both in terms of revenue and profits. We are especially pleased with the outstanding performance of our HPPC segment, which achieved a robust 21% growth. Our textile specialty chemicals division also performed well, registering a 21% growth. However, the AHN performance, animal health and nutrition performance remained flat due to industry headwinds. Our ongoing efforts to expand our domestic and international customer base have been instrumental in achieving significant year-on-year increase in both revenues and profit, which grew by 19.3% and 19.5% respectively. We are experiencing notable success in our export markets, which are growing faster than our domestic markets. This growth stems from our strategy of targeting new customers in both new and existing regions. Our participation in key industry events worldwide has significantly contributed to this success. At Canspec Europe 2024, a key global event for the fine and specialty chemicals industry, we unveiled our latest innovations in specialty chemicals, connected with industry leaders, and showcased our commitment to cutting-edge solutions. Similarly, our engagements at In-Cosmetics Korea, In-Cosmetics Global in Paris, and CPHI Southeast Asia 2024 allowed us to present our advancements in beauty, personal care, and pharmaceuticals. The positive reception at these events has helped us build strategic partnerships and stay at the forefront of the industry trends. These strategic efforts underscore our dedication to pioneering innovative, sustainable, and customer-centric solutions across diverse sectors worldwide. Overall, we remain committed to our growth strategy across all business divisions, with a particular focus on agro-surfactants, the phenoxy series, the institutional cleaning, oil and gas, and performance chemicals. While our export market has shown remarkable growth, our domestic market continues to be a key driver of our success. By developing new verticals within our core chemistries, we have laid a strong foundation for future expansion both domestically and internationally. This balanced approach ensures that we can capitalize on growth opportunities globally while maintaining a robust presence and driving significant value in our home market. I would now like to invite Ketan sir to share his perspectives.
Thank you, Charita, and good evening to everyone. Let me provide you with a brief overview of the financial performance for the quarter ended June 30th, 2024. As Charita said, we've had one of our best quarters and a strong beginning to FY25, with revenue from operations growing by 19.3% to 489.7 crores compared to 410.6 crores in the same period last year. Our EBITDA has improved by 12.5% to 64.9 crores from 57.7 crores, with an EBITDA margin of 13.3% compared to 14.1% in the previous year. The drop in EBITDA margin was primarily due to increase in other expenses, mainly driven by higher freight, travel, maintenance, and selling and distribution costs. We've reported a record PAT of 34.9 crores, an increase of 19.5% from 29.2 crores. Coming to our segment-wise performance, our HPPC division saw robust growth of 21% YOY during the quarter, reaching rupees 365 crores compared to 301 crore. The textile specialty chemical division also grew by 21%, up to 98 crores from 81 crores. AHN division experienced muted performance, with the revenues at 27 crores in Q1 FY25 compared to 29 crore last year. In terms of revenue contribution, this quarter, HPPC leads with 75%, followed by textile specialties with 20% and AHN with 5% of the revenues. Moving forward, our expansion projects at Dahej are progressing as planned and are expected to be completed by the end of the current year. The expansion includes adding 20,000 tons of capacity for products related to HPPC in the specialty chemical space, as well as producing ingredients for our subsidiary companies. Additionally, to cater to the growing demand in the agro, home and personal care, oil and gas and pharma sector, we are adding ethoxylation capacities of 30,000 metric tons at Dahej facility of Unitop. The commissioning will happen in the phased manner within the current year. These expansions will enable us to meet the growing demand across key sectors, further driving growth. To conclude, we are confident about the opportunities in our business verticals and believe that our robust R&D framework, strong financial base and a diverse product portfolio will continue to drive our success going forward. We remain dedicated to our strategic growth initiatives, consistently driving innovation, improving operational efficiencies, and better capacity utilization. We are confident that these initiatives, coupled with our disciplined financial management and investment in our people, will enable us to deliver sustainable growth in the coming years. That's all from my side. I would now request the moderator to open the forum for any questions which the participants may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi, good evening, sir, and thanks for the opportunity. Congratulations for a decent set of performance, given the current macro. First question on the revenue growth. Over the last 3-4 quarters, we have been reporting around, let's say, 15 to 20% odd year-on-year revenue growth. How has been the volume growth trend here, if you can highlight that?
Thank you, Ankur. I think the primary growth driver for the last few quarters and this quarter has been the volumes for us, both in HPPC and this quarter we also saw good volume of take in the textile specialty chemicals. So I would say the entire growth mostly is coming out of volumes. Prices are more or less stable now. There are some places where we have taken slight price cuts just to get into the volume game, but overall prices seem to be stable now.
Sure. So would it be fair to say that large part of the growth over the last, let's say, 2-3 quarters is led by volume, which is, let's say, 15-18% odd volume growth?
Yes.
Year-on-year.
Yes.
Okay, great. Now, second question on the standalone and the separate performance for standalone here. If I go back, we used to do 15-17 odd % EBITDA margins, even higher than that, right? Pre-COVID, and after that the numbers had come down, and we have been consistently in that 12-13% odd EBITDA margin range for the last 6 to 8 quarters. Would we go back to those 15-17% EBITDA margin here, or this is the new normal that one should look at?
Ankurji, now, the major businesses, surfactants and Unitop, which was of course planned at Rossari as a calculation earlier, and I think we should consider this as a new normal in terms of EBITDA margins.
Sure. So both on the subsidiary and on the standalone franchisee.
Yes, Ankur. Now, since both the subsidiaries and the standalone Rossari, a lot of the ethoxylation and the products are going to go in a cross-selling mode. So it would be ideal to look at it at the similar levels, and even going forward, as some of the capacities which we are putting up in the Rossari facility of Dahej will actually manufacture ingredients which will go in as inputs for the products which are manufactured at Unitop. So there will be a lot of cross-selling now between the, as it is having a lot of cross-selling. This is only going to go up now over the year. So it would be ideal to look at the EBITDA margin at a consolidated level, and as Mr. Chari said, this is what, at least for the current year, this is what we are seeing. 13.5% will play between these two numbers.
Okay. Okay, great, sir. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Abhishek Navalgund from Nirmal Bang Equities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So my first question is on the HPPC revenue. So could you clarify what sort of contribution would have come basically from the Brazil Rossari segment here?
Brazil Rossari segment is a similar sales as last year. Institutional chemicals business was about 60 crores.
Okay. The reason why I'm asking this is, we did around 160 odd crores last year, full year, and we are talking about, let's say, doubling the number. So just wanted to understand in this quarter also, the other expenses look little higher. So just wanted to understand that business is like a relatively low margin business, and any significant growth in that business would have contributed to this blended margins profile. That was the main question, actually. So you're saying 60 crores for the quarter, right?
Yes. So, Abhishek, we've done 60 crores, around 60 crores for the quarter, and I think we are in line with what we had talked about earlier for reaching the annual number.
Sure. But do you think because of this 300 crore number, ex-Brazil Rossari margins should improve on a consolidated level?
Yeah, see, that way, if you see a lot of X things, margins will improve, but we have to see the business overall. So while this is a tough business to be in, but this is a business we want to grow. So even if it's currently a challenge on our margin percentage, we are okay to keep seeding this business for the next few years till it reaches its a certain size.
Sure. Perfect. And last question from my side regarding that GST penalty notice press release that you have put. So should we expect a provision going forward for a 25 crore number?
No. There won't be any provision. That's an order which has been passed for some, as per the department, it's an IGST refund which they claim to be erroneous. We've taken proper legal views on the order which has come, and we are now going to appeal against this order with the higher authority of Commissioner Appeals, and we are quite hopeful of getting a favorable order on this.
No, this
so you're not going to provide for the same, right?
Abhishek bhai, this notice has been given to practically thousands of exporters, who have, taken refund on IGST paid on export trade. So it is an industry-wide, and there is a big hue and cry, and everybody is sure that this will not stand in the court of law.
Sure, sir. Perfect. Thank you so much, and all the best.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. First, a clarification on textile revenue. Have you made any changes to the reporting? Because I think the base year revenue appears to be lower than what you have reported last year, same quarter. I think this presentation is showing it.
Yeah, so Sanjay, yes. So that change actually we had done in quarter 2 of last year. We had done a reclassification of a product from textiles to HPPC. So if you see our Q2 presentation of last year, we had done this change and we had put in a note that we've regrouped.
What was the product?
I think it was. I'll need to check that exact product what it was, but it was a HPPC product which was grouped into textiles in the first quarter, and we had made that correction in Q2 of last year.
Okay, this was only for that one quarter that mistake happened.
Yes. So if you see our Q2 presentation, it's been corrected.
Okay, got it. And just one more clarification on textile. If I look at overall 3 years trend, we have been hovering around 100 crores of revenue. While you look at the peers like Atul, Rodolph and all, they have reported quite a healthy revenue growth in the textile segment. Any particular reason why we are not able to grow while some of the peers who are listed and report the number have been growing faster than what we are growing? Any particular reason? Or we are more focused on HPPC and hence textile is taking a back seat?
No. We are focused, Sanjay ji, Chari and Namaste. We are focused on the textile business. We have a bigger base, now currently.
This is now bigger than us. But just in terms of growth rate, are we losing any market share there?
No, because our volumes have grown because raw material prices have fallen, FG prices have fallen, and volumes, we see, better volumes in textile compared to last year.
Okay. So why then we are not able to translate? And I thought Edwards had also said that we are introducing a lot many products in the finishing side of it, which I thought were higher realization and hence would have grown faster. But if I look at the revenue, for last 3 years, we are stuck at that 100 crores kind of a quarterly run rate.
No, compared to last year, the finished good prices have fallen substantially, which has translated also into higher volumes in the textile chemicals. So for us, we are steady, means we have grown. Now, there would be other companies who would be on a smaller base and would have taken share from our competitors. We have also taken some share from our competitors because the textile markets, as such have not grown. The home textile business is now on an upswing in India. Orders are good with our home textile exporters, especially for the USA market. So we are confident of better sales in the coming quarters.
Fair enough. Second, on the HPP segment, if I just take out the part of it, it appears that quarter on quarter there is a decline of 18% in a non-Unitop kind of a business. Any particular reason why we are still very healthy? I appreciate that, but on a sequential basis, it appears to be a much steeper fall. Any particular reason there?
Sanjay, what you are saying, you take out what?
That is HPPC X of the Concall minus standalone.
You cannot see it like that, Sanjay. As I already just some time back talked about it, there are a lot of products now which we are cross-selling. So
okay.
Please don't subtract. I think I've talked about this earlier also, that it's not a right way to look at the numbers now for Rossari. So for Rossari, because part of HPPC is done through standalone, part of it is done through Unitop and Tristar. Some of the customers of Unitop and Tristar, which we have developed within the Rossari distributor network, are actually routed through sales are routed through Rossari. So there are lots of cross-selling that's going on, and that's only going to increase now with the new capacities coming up both at Unitop and Tristar. So my submission would be to not simply subtract numbers in the financials and look at it. It would be better to look at it at a group level.
Sanjay, to add to what Ketan sir is saying, quarter 1 financial year 24, we did 301 crores in HPPC. In last quarter, the quarter 4 of financial year 24, we did 344 crores. And in the quarter 1 of financial year 25, the last quarter, we did 365. So we have consistently grown in HPPC segment. So please look at it holistically, sir.
No, I appreciate that, but the problem is that one of the product which is agrochemical is a seasonal product, and it has become fairly large, and I don't think it is an HPPC product. It's a completely an industrial product. It's a B2B product. And hence I just wanted to see if I take it out, then how is our underlying actual HPPC product, which is our earlier standalone product, looks like. But I appreciate that. I know there is a lot of cross-selling, so I don't read it very thoroughly. Because it was a sharper drop, hence I thought of asking it.
No. So Sanjay, also you must know that Unitop is just not an agro thing. Today, I think we had spoken some earlier also. At the time of acquisition, Unitop's sales of agro products was 60-65%, or even higher. Today, the ratio between the agro and non-agro is almost 50-50. Maybe this quarter it would have been 45 and this thing because of the season. But the non-agro business of Unitop has also grown significantly in the last few years, post the acquisition.
Got it.
To add here, even the non-agro business in Unitop grew by nearly 30%, in this quarter. Agro grew, but non-agro also it grew very well.
One small request. We have a product like agro oil and...
Sorry, Sanjay, lost you.
Yes. You're not audible, sir.
Can you hear me?
Yes, this is better, sir. Please go ahead.
Okay. So apologies for that. Ketanji, if we can have a separate segment for agro, oil and gas, and can we have one, the clean HPPC, so we can appreciate the growth in both the segment. That would be very helpful because agro is more seasonal product. It will create certain volatility. That's a small request from our side.
Yeah, okay, go ahead, Sanjay.
The other question is on the new product portfolio. Last time when Edward said, highlighted us, there was slew of product in terms of green chemistry, in HPPC and all, including some of the pharma side. Can you just highlight which are the products being launched and other products where are they in the pipe?
So, Sanjay, in the HPPC segment, we have introduced a lot of esters in the last couple of quarters. So all these products which were in the R&D stage, they have been launched both in the market as well as raw materials for Unitop. So most of these esters were being outsourced by Unitop. Now they are being manufactured in-house at our Rossari Dahej plant. So that project has taken off very well, like the SMOs and SML and SMS as well as the MRO kind of products. So that has already taken off. Then we have the cocoa amino propyl betanes as well as the cocoa diethanolamide product CDEA. So there are many such other ingredients that we have started at Rossari. These have been launched in the marketplace as well as we are cross-selling to Unitop. Like we said that last time that biosurfactant was pilot scale we have scaled up. Now this has gone into production and we have taken action to increase the production capacity of our biosurfactant as well. Finally, also the silicone block polymers are now completely made in-house, barring one or two products which we still outsource. Otherwise, all other products have been we have started manufacturing in-house. So if you look at whatever projects we have taken up in the last couple of quarters, most of them have been introduced in the marketplace, and some of the green chemistries like the bioscouring agent, the green hydro, these also have been launched in the marketplace, and some sales have started being developed for them too.
Very, very helpful, sir. Just one last question from my side. Any update on the cosmetic side of the business which we were developing? How are we placed there and how is that performing?
Cosmetics, Sanjay, what kind of products you are referring to, sir?
So all the cosmetics, I think we started with Purple or somebody, right?
Yeah.
And we wanted to expand that all cosmetic side of business.
Yes, the Purple business is doing well. I think it has grown quarter on quarter also very substantially. But in the cosmetics also we are developing a lot of polysorbates, which are surfactants which go into personal care formulations. And that sale even in export and domestic markets is increasing very well. We are introducing a lot of esters in the personal care area. And I think going forward we should see good traction in that also.
How big has it become for us now? Is it 25-50 crore kind of a top line for us now?
We don't have figures because we don't bifurcate, into this and we give it as only HPPC segment.
Got it. One last question, sorry, before I come in the queue. Any updates on the exports? I think we were very optimistic on the exports, both on the textile side and Unitop side. Any further update on the textile business, particularly on the textile side?
Yeah. So I think exports continues to be, our main driver now. At least we've seen that in the last few quarters. This quarter also, if you see of the overall revenues, I think close to 24%, 25% would be exports.